Hey guys, this is Mike. How's it going? So today I am dropping in to share a quick update on the US stock market performance in 2018 and to provide a little bit of perspective on the recent sell-off. Here we go. 2018 turned out to be a pretty tough year for US and global stocks. The S&P 500 recently fell about 21% from the 52-week high, and the index is now down about 5% on the year. It's the first time, or actually I should say, when the stock market falls more than 20% from the 52-week high. That's called a bear market. And this is the first time that we've seen a bear market in US stocks since 2011, so it's been about 7 years. Historically speaking, bear markets happen once every 3.5 to 4 years. So the US stock market was overdue for some kind of larger correction. I'm not trying to make light of the weakness in the stock market. It was a brutal fourth quarter. But having said that, just to put it into context, these kinds of things do happen in otherwise fairly healthy markets. Okay, so having said that about the S&P 500, here's something I want to share with everyone to give everybody a little bit of perspective on some of the weakness we've seen. Evaluating the broader stock market or any individual stock over a 12-month period, realistically, that's a pretty short amount of time to look at the price performance of some kind of asset or security. So if you sort of take a broader look at the S&P 500 or any individual stocks like Amazon, Google, for example, you start to get a better perspective on what kind of performance have we seen from the US stock market and these individual stocks over the last couple years. It's a wider window. It gives you a more accurate portrayal of what's really been going on. So for example, if you take a look at the S&P 500, we'll start with the S&P 500. Despite the fact that there's been this pretty sharp pullback here in the fourth quarter, the S&P 500 is up 15% in the last 2 years, the price. And then when you add in dividends, which is basically 2% a year, that bumps the return up to 20%. So despite the recent pullback, the S&P 500 is still up 20%, has generated a 20% total return in the last 2 years, average of 10%. If you take a little bit of a wider view on the S&P 500 and you expand to 3 years, a 3-year performance chart, what I see is that the S&P 500 is up about, and when including dividends, it's up like 34% in the last 3 years. So again, it's tracking on that around a 10% annual return. Okay, so let's expand our view to 5 years. You take a look at a 5-year chart of the S&P 500, and what I see here is basically a 60% return. So that's an average return of 12% over 5 years. So the point I'm making here is that I know that 2018 was a really hard year. There's lots of red. But if you take a broader look at the stock market, what you see is that the returns over the last couple of years have been pretty awesome. And if you give your investments some time to breathe, for the long-term trends to kick in, for the fundamentals to kick in, that increases the probability that you're going to be successful with your investing. The longer you're in the market, the higher probability that it's going to go up. At any rate, so I just wanted to provide a little bit of perspective on the recent sell-off, even though I know it's been painful and some of our favorite stocks have been getting kind of banged up. I just want everybody to focus on the longer term picture. If anyone does have any questions, feel free to send me an email. Get in touch with me. I'm going to be following up with a couple of newsletter updates. I'm going to be recapping 2018, and I'm also going to be talking about my outlook for 2019, some of the things that I want to do for my clients and some ideas I have for the portfolios. So I will definitely be in touch in the next couple days, the next couple weeks. I hope everyone has a great day. Talk soon.